my window.
Hello, traders. Gary Wagner with the Gold Forecast here. Monday morning, the 11th day of April, approximately 10:30 in Honolulu, Hawaii, and this is the Daily Report. Gold is under pressure today, currently trading roughly at 1463. We, of course, lowered our stops today to 1460, so we're in at 1433, out at 1460 for a nice profit. Here's what I was looking at. I'm going to show you some of the intraday charts in a little bit, but just from the daily chart in terms of the standpoint, of course, we looked at this yesterday. We talked about different targets, and at that time we were recording. The market itself was actually over this particular hump here. And the hump that I'm referring to, of course, is this right in here, and how the market tucked up right up to this particular Fibonacci area. If you recall, these extensions that we put in a couple of days prior. It's odd how well Fibonacci will allow one to track the market. It sometimes amazes me. Now, we put the stop at 1460, and of course the low was right around 1460. It's a couple dollars higher right now. Now, whether or not this will hold is yet another subject. We are going to let the gold dust settle, so to speak. We've gotten profits in the trade. I'm happy about that. I really want to see where this market wants to go and act accordingly. Traders, we are looking at a 60-minute candlestick chart. I do have a Fibonacci extension. You can have an idea of what kind of screen I try to look at as I chart and plot the market through the day on my subscribers' behalf. Just because I'm not doing the report doesn't mean I'm not sitting here looking at the market. And what's interesting about the way this market went, you've got this beautiful, beautiful kind of a rounded top here. And the interesting thing is we hit this top, it's about, 1476, and here's our top right in here. The market stalled for a little bit, of course, and then began trading lower. Now, on a 60-minute chart, it does appear on a tentative basis that it has found some support, but again, this is very much a short-term chart. It could easily still have some room to the downside. As I say, we will have to see how the market pans out through the day. And as you know, I'm not afraid to jump back into the market once I feel comfortable with the signal, once I feel as though this retracement's over. Because traders, when we consider the Elliott wave count, it's my belief now that in terms of this minor wave, we've just gone into 4. Let me show you what I mean. And of course, for that, we're going to go back to the daily chart that we just looked at. So we have the beginning. We have our first wave. This is our impulse. This is our corrective. Now, from there, we are going to go into a minor count rather than this long count. So on our minor count, I have 1, 2, 3. My belief is this is probably going to be 4. And then we're going to get 5. So that's somewhat in terms of what I am looking at. This retracement here really shouldn't take us by surprise. It really isn't all that unexpected when we consider what this market has done in terms of where it has come up from on this last rally here. You know, you're looking at a very sizable move here. And although what I am looking at is a move that's going to equal this wave 1 to complete, of course, this wave 3. So if your question is there more room to the upside? I absolutely believe so, because my sentiment is we have this corrective wave down, and then we have a final 5th impulse wave 1. And secondly, that final 5th impulse wave is also going to be the final component of our major 5th wave. Traders, that should be more than interesting. Now, traders, for the last chart I want to look at for the day, that's going to be a 360-minute candlestick chart in Henkin format. And the reason I'm bringing that up is so that we can take a look at something a little bit more than a daily chart, but not really go into intraday that deeply that we're looking very, very narrowly into a very, very short-term move. And when we look at this 360, you can see this small doji-like candle, and then you can see, of course, that flip or turnaround to the downside. Is this correction over? It very well might be. We will be looking at the retracement levels over the next few days because it did hit some pretty key areas. And of course, one of the key areas was coming down to that 1460, hitting our stop, and at the same time, trading still under pressure. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Tuesday for another daily review. Bye-bye.